Welcome. I'm Frank Holsteen, Managing Director of Wespath's Investment Management Team, the team that oversees Wespath's investment funds. Today, I'm pleased to be with you to talk about three highlights from the second quarter: a company named Nvidia, the rising cost of homeownership, and meme stocks. First, the markets. The S&P 500, which tracks the performance of the 500 largest companies on U.S. stock markets, returned 4.3% in the second quarter. The tech-heavy NASDAQ index posted a gain of 8.5%. Nvidia, a primary supplier of hardware and software used for AI, or artificial intelligence, continued to lead the way. Nvidia's stock price was up over 36% on the quarter. In June, it briefly surpassed Microsoft to become the world's most valuable company. Nvidia's shares alone have driven roughly a third of the S&P 500's year-to-date gain. The stock market has become concentrated in Nvidia, Microsoft, and a relatively small number of technology companies. Analysts disagree about whether those tech companies can maintain the exceptional earnings growth upon which the market is valuing their stock. The emerging technology around AI has the potential to create tremendous profits for investors. Only time will tell whether we are witnessing a concentrated stock market bubble, like we saw in the dot-com era of the late 90s, or the benign concentration of the stock market in the 1950s and early 60s, when AT&T, Exxon, and General Motors were dominant. Regardless of how the story unfolds, Wespath steadfastly believes in the power of diversification to help our participants and investors over the long term. Shifting to housing. Like a share of Nvidia stock, the cost of homeownership has been on a steady upward climb. In May, the median price of an existing home sold rose to a high of $419,300. That's an increase of nearly 6% from last May. New homes are even more expensive. It was hard to be encouraged by the latest data on home sales. The cost of homeownership was up in all regions of the country. High housing costs can make it hard for employers to attract and retain talented employees. High housing costs can also perpetuate income inequality. Low-income households may have to leave a hot job market with inflated housing costs and move to communities with lower wages. As you may know, Wespath's Positive Social Purpose, or PSP, lending program promotes the creation of affordable housing. Since 1990, our PSP lending program has invested over $2 billion in affordable housing and community development projects across the country. We'll finish with the return of Roaring Kitty. That's the nickname of Keith Gill, the trader who inspired the movie Dumb Money. Back in 2020, thanks in part to Gill's online cheerleading, GameStop became the original meme stock. Its stock price swung wildly, oftentimes more because of social media posts than its revenue and assets. Then, for 3 years, Gill largely disappeared from public view, until this May. His cryptic return to social media led to a massive increase in the price of meme stocks. Then in early June, Gill hosted a live stream on YouTube and showed what he said were his significant holdings in GameStop stock. Finally, at the end of the month, his social media posts sent shares of Chewy, a pet products retailer, soaring. As we've shared in the years since Gill's original meme stock craze, Wespath's long-term investment philosophy isn't deterred by fads and headlines. But if you're curious about the history of meme stocks and for our perspective on the movie Dumb Money, check out the links in the description. As always, Wespath will continue to monitor the latest market movements and update you on the most important developments. We're here to keep you informed and help you achieve your long-term goals.